Good morning. Today's class let us going to see about ratio analysis. In the let us see about the meaning and start with the sum. Ratio analysis is nothing but it should be arithmetical expression of one number to another number. Okay, it is the most powerful tool to calculate the ratio. Ratios should be important tool to calculate the arithmetic expression of financial position of the company. In that a lot of ratios should be there. We know that current ratio, liquidity ratio, absolute ratio, debt equity ratio, gross profit ratio, net profit ratio, so on. So many ratios are there. Today's class let us going to discuss about small sum about how will you calculate about current ratio, liquidity ratio and absolute liquidity ratio. Let us start with a small sum. First one is cash is given rupees 80,000. Closing stock will be rupees 1,80,000. Creditors will be rupees 50,000 and the tax payable will be 75,000. Debtors will be 1,42,000. Bills payable will be rupees 27,000 and final one is outstanding expense will be 15,000. So this should be the sum. We know that these are the small things: cash, closing stock, creditors, tax payable, debtors, bills payable and outstanding expense. So these are the things, information will be given. We are going to calculate about current ratio. So it's nothing but current ratio formula is current assets divided by current liabilities. So what are the things that should be current assets? Current assets is nothing but should be easily converted into cash. That should be current assets. For example, if we are having a cash in hand, let us take it as cash in hand. If you are having 10 rupees right now in hand, if you are, for example, if we want to avail the bus, means we want to get up with ticket, that 10 rupees will be spent over. So in a what do we means should be easily converted. So and then cash at bank. So these are the things that should be current assets. Should be easily converted into cash within a fraction of minute. So the formula for is current assets by current liabilities. So here 80,000 will be cash. So we can easily convert to cash. And then 1,42,000. The 1,42,000 is complete debtors. So here no doubt. And then third one is 1,80,000, that should be closing stock. So closing stock we can know at the end of the stage only. Final stage. So divided by current liabilities. Current liabilities is nothing but what at the time we have in our hand. So that thing. So 27,000 will be bills payable. We want to pay the bills, recording bill. And then plus 50,000 will be creditors. And then 15,000 will be outstanding expenses. And the last one is 75,000 will be tax payable. So these are the things should be divided. We can get 3,40,000 will be current assets and 1,67,000 will be current liabilities. So can divide it and get the ratio. So 2.4 is to 1 will be ratio. So ratio is nothing but we can get it into one numerical expression. So like this value will be, so this is the ratio code, so is to 1. So this is the final answer for the current ratio. Now second one, how will you find out the liquid ratio? So liquid ratio formula is nothing but liquid assets by liquid liabilities. Here liquid assets is nothing but, so one and two things will be matched over with this. One is cash, another one is debtors. So this one and two things. So liquid asset divided by liquid liabilities. Here the cash plus debtors divided by liquid liabilities will be that 1,67,000 will be, we can already find it this one in current ratio. We can get back this, and the final answer will be 1,60,000 divided by 1,67,000. The final answer will be 0.96 is to 1. This should be the final answer. So in this problem we can short out with two things. One is current ratio and another one is liquid ratio. Okay. Thank you for your presentation. Third one is absolute liquid ratio. The formula for this is absolute liquid ratio is equal to absolute assets by absolute liabilities. Same like that of only how we can find this liquid ratio, same will be absolute liquid ratio. We can short out with this problem with the next class. Thank you for the presentation. Okay.